In this video, I'm going to show you guys the best hidden divergence trading strategy that is around in Forex right now. It's simple, it's easy, and it's free. So watch into the end and make sure that you master this strategy to bring your trading to the next level. All right, guys, so to start off, there's two ways to trade this strategy, okay? There is an automated detection way and there is a manual way. I'm going to go over the automatic detection way in this video, and in the future I will make a video on how to manually detect divergences if this video does well. So it's really simple. To keep things brief, all you need to do is install an indicator called divergence for many indicators V4, and all you have to do that is go to indicators at the top of your screen on trading view, type in divergence for many indicators V4 by lonesome, and add that to your chart. Once that is on your chart, I'm going to walk you through the settings real quick. You're going to click the settings icon, you're going to go to input, and you're going to change the divergence type from regular to hidden. In this strategy, we are only looking for hidden divergences. Next, you're going to scroll down, you're going to uncheck everything except for the MACD histogram, the RSI, and the stochastic. The only things we want to see is the MACD histogram, the RSI, and the stochastic. So that is all for the settings. Now we're ready to rock and roll and trade and win, hopefully. So at this point, I'm going to break down the mindset and how the strategy works, and then I'm going to show you how to trade it. How the strategy works is that this indicator, divergence for many indicators, is looking for hidden divergences. What a hidden divergence is a metric that says that there's either more buyers or more sellers in the current market. If we are in a downtrend and there is more buyers than sellers, then that you can expect a pullback because the price was going down because there was more sellers, and now there's more buyers, and that creates an imbalance, and the trend reverses until there becomes a point where there's more sellers again, and then the price will drop off more. Let me show you that in a visual setting. So if we're in a downtrend, at this point right here, there's more sellers. Something happens around this level, and that is creating one of these bullish hidden divergences, and the price is going to pull back a little bit. When the pullback is nearing its end and it switches again, so there's more sellers than buyers, that is when the trend continues down. When this happens right here, you will get a divergence indicator, just like this red one right here. That is happening. As you see, the price is coming down. Eventually, there becomes more buyers than sellers because all of the sellers sold and now there's just buyers, and the price is going to pull back up. At this point, with this divergence right here, that is telling us there's more sellers again than buyers, therefore the trend should continue. So that, you guys understand? So it's very simple. So if price is going like this or whatever, then at these peaks there's more buyers, and at these peaks there's more sellers. The RSI or stochastic or this indicator, divergence from many indicators, helps us spot and understand where those points are on the chart. So the divergence from many indicators will pop up this red icon here when it believes that there's more sellers in the market again. And it will pop up this green marker here when it believes that there's more buyers in the market, creating imbalances, which we like to take advantage of for scalping. So let me clear all of these. And at this point, I'm going to show you guys today 2 different periods of time where I traded this strategy and made some good trades and some good money. So if we're looking at the chart here, what we can see is a large downtrend, right? This downtrend goes for a while, and there's kind of 2 different ways to look at it. We could either go that way or we could go this way. Doesn't really matter. Either way, eventually price started making higher highs instead of lower highs, reversed, and went the other way. But while we were in this downtrend, we actually were presented with some amazing trade opportunities. So let's look at those. The first trade opportunity is obviously the first red box on the far left of the screen right here. What we can see happened here is that price was in a downtrend, obviously, like this. And at some point that downtrend reversed. There was more buyers in the market, represented by this burst in green candles right here. And when that polarization flipped again and the sellers took back over, it gave us this red indicator saying that there was a divergence on the RSI, the stochastic, and the MACD histogram. What all of those things do don't really matter to you as a beginner trader, and if you want to learn more about them, there's plenty of videos on YouTube. But for the sake of this video, all we need to know is that those things had a divergence indicated by our indicator, divergence from any indicators, and now it is time to place a trade. Let me zoom in really tight for you guys here so you can see exactly how I trade these and get rid of these circles. So I set my stop loss right at the wick of the candle, or if there's like a really close peak, I would set it there. But at this point, I would go right here at the wick of this candle, and I would target a 1-to-2 risk to reward ratio. So boom, I got one right there, and at this point, I would gain 2%. Oops. And at this point, I would gain 2% or 2 units. All right, so now we are presented shortly after with a second trading opportunity. Let me get my marker. As you can see, the price is going down and down and down, and then represented by this big green run here, the buyers have taken control again. Luckily, our indicator here shows me that there was a divergence and the sellers have taken control again. That presents us with a nice opportunity. For another trade. We're going to set our stop loss right at the wick of this peak here and go for a 1-to-2 risk to reward ratio. That works out in a nice trade for us, and we take another win, which would give us another 2% or 2 more units. Okay? As we keep following price, it keeps going lower and lower before, obviously, you guessed it again, the buyers are taking control again. The buyers are taking control again right here in this green uptrend, and then the indicator lets us know that there's a divergence on the RSI, indicating that the sellers are now in control again and the trend is going to continue. We set our stop loss at the top of the wick, go for a 2RR, and we are given another nice win. Obviously, as you know, this gives us another 2% or 2 more units. Now, you can see that we get a bullish divergence here, letting us know that the trend has maybe reversed. And then we are giving another bearish divergence, which we would never take because, as you can see, this bearish divergence is only coming from this peak to this peak, and it has nothing to do with the main trend. As soon as we get this green divergence here coming from here to here, it's looking like the trend is starting to reverse. Another way we can tell the trend is starting to reverse is that the time between these explosions of buyers gets shorter and shorter. You can see here that the first time the buyers take control is much greater in the first part than the second part. You can see here that it took the buyers around 20 bars to regain control in the beginning of the trend. Then in the middle of the trend, it took the buyers around 15 bars, then 10 bars, and then 5 bars. So you can see the trend is getting shorter and shorter by how quickly and easily the buyers are able to regain control. The easier it is for the buyer to regain control, the harder it's going to be for the sellers to push the price down lower, and that's what's causing the trend to start slowing down and reversing. Now let me try to find you guys a nice uptrend so that we can look at this on the reverse. And if we just go back a little bit in time, we can see that there's a nice uptrend with several continuations for us to chart right here. So we can see that the trend begins down here, and this is about the lowest of the low for a while. The price climbs with higher lows and higher highs for a while before eventually forming a double peak and facing a major reversal. While this price is going up and making a nice uptrend, we can see it right here. There's several places where you can probably see now with green boxes that it is indicating there is a positive divergence, which is just obviously the reverse, of the bearish and negative divergence. We can see that price is moving up, and we can see that right in this period of time, price is coming down, and it looks like the sellers are starting to try to retake control again. Indicators were indicated here with our divergence for many indicators that the buyers have reestablished their foothold and control, and the price is going to climb upwards again. So we can enter with the exact opposite reverse of how we would enter into a bearish trade. We set our stop loss right at the bottom of the wick, and then we go for a 2RR. Then now we can see that price continues upwards before it starts to struggle again, and it looks like the sellers are trying to retake control. During this time, our indicator gives us an indication that the buyers have established control again, and price is going to continue upwards, represented by this green box here, represented by this green box right here. So we're going to set our stop loss right at the bottom of the candle and go for a 2-to-1 risk reward, and no problem, we get it. You're going to see that shortly after that, the sellers then push the price back down again immediately afterwards, and we're giving another indicator that the sellers have again resubmitted their foothold. And so we're going to place our entry there, set our stop loss here, and go for a 2-to-1, which we obviously get. I want to note that then price drops off major, and to us, that the trend is over. This is a certified reversal. You can see that the price broke through all of these lows. That is giving us a reversal. So we do not want to take any more indicators or any more hidden divergences until we have a new established trend. I hope this video helped you guys learn a new trading strategy and understand how to trade divergences. I hope you really enjoyed, and if you did, go check out all my other videos. I have lots of videos on cool strategies, tips, and tricks to level up your forex trading.